How to double your SafeMoon tokens now explained. This elective asset has a shrewd strategy for compensating long-haul owners. Clayton Moore, CEO of NetSense Technology, a cryptocurrency-based payment processing platform, explains. In contrast to most other cryptocurrencies, SafeMoon penalizes investors who sell it by imposing a 10% exit fee. A big part of that fee is redistributed to all SafeMoon holders, while the other half is burned. The company promises to carry out a burn strategy that is helpful and compensates for long-haul holders. Hello guys, and welcome back to our crypto channel. Today in this video, we will be sharing how you can double your SafeMoon tokens just by holding and current updates on SafeMoon. But before we get started, make sure you're subscribed to our channel. Also, stay tuned with us until the end so you don't miss out on anything crucial. Let's get started. When SafeMoon was launched, it launched with a quadrillion tokens. That is a large number of tokens. Upon launching, the devs team burnt about 22.3% of those tokens. That's about 223 trillion tokens. Doing this leaves us with a 777 trillion token supply, which is still a lot. Anyway, we launched with 777 trillion tokens. It's important we mention this because it's necessary for understanding how SafeMoon's tokenomics works. However, why is tokenomics so important? Well, tokenomics is important because it is how we can reduce this overwhelming supply to a much smaller number, which will create scarcity, drive up value, and increase prices. As you well know, every transaction with SafeMoon comes with a 10% fee. 5% goes to a liquidity pool as well as a burn wallet, while the other 5% is redistributed to all holders, which then becomes what we know as reflections. This tax is applied for any kind of transaction, whether it is a purchase or a sale. That means that if you bought $1,000 worth of SafeMoon, what you'd get in your wallet is $900, not $1,000. 10% of the $1,000, that is $100, is removed as a fee, and $50 will be redistributed to all investors. However, of course, this is distributed based on the amount of tokens each investor holds. This is important for the sake of fairness. People who believe more in SafeMoon and back it up by investing huge wads of cash shouldn't be rewarded the same way as those who just threw in $1 for the fun of it. Now, these reflections or static rewards, as they are more technically referred to, help to solve a host of problems. In the first place, the reward amount depends on the volume of the token being traded. This mechanism helps to alleviate some of the downward sell pressure put on the token caused by early adopters selling their tokens after farming crazy high APYs. Secondly, the reflect mechanism encourages holders to hang on to their tokens in order to gain higher kickbacks depending on how much they hold. Now, the other 5% that isn't redistributed as reflections, half of it goes into a liquidity pool. This liquidity pool is very important because it helps to keep the value of SafeMoon stable. If a large holder of SafeMoon wakes up one day and decides to sell off all their tokens, as expected, there will be a price dump due to the fact that there is now a large and sudden increase in the total supply of SafeMoon. However, the liquidity pool acts like something of a safety net. This does not mean that prices won't drop. It does mean though that whenever any major market move happens, it wouldn't take such a huge toll on SafeMoon. Moreover, a liquidity pool is something of a bank that backs SafeMoon such that whenever you want to sell, you'll never be stranded. You will always be able to sell off your tokens when you want. One more aspect of SafeMoon's tokenomics is manual burn. Here's how that works for SafeMoon. Now, a continuous burn on any one protocol can be nice in the early days. However, it would also mean that the burn won't be finite, neither would it be controlled. Moreover, you don't want to implement something that you can't control. This is why the SafeMoon devs team opted for a burn that they could control instead. If the manual burns are controlled by the team and promoted based on achievements, then the community will be rewarded and informed. The conditions of the burn as well as the amount of tokens burned will be advertised and investors can keep track. This strategy is both beneficial and rewarding for everyone who decides to invest for the long term. Additionally, the total number of SafeMoon burns is always featured on the website for added transparency. This way, no one is left in the dark about anything. Alright, now that we understand how SafeMoon's tokenomics works, let's talk about how you can double your SafeMoon holding. By the way, there's a SafeMoon calculator on the SafeMoon website, so you can use that to calculate your reflections. In addition, when the wallet is launched, it's also going to come with a reflections calculator as well. Surely by now everyone knows why the wallet launch was delayed. We'll show you how you can calculate how much you get in reflections under any given volume and any given number of SafeMoon. It's a really simple formula. So you calculate 5% of the volume multiplied by your market share. And what's your market share? Your market share is the amount of SafeMoon you have divided by a quadrillion. To make this equation even simpler, we can move 0.05 to the denominator. This will give us a much simpler equation where reflection is equal to the volume multiplied by how much SafeMoon you're holding and divided by 20 quadrillion. Using this simple equation, therefore, let's say you own a billion SafeMoon tokens and we have an average daily trade volume of 50 million per day. If you want to calculate how much you'll be getting daily in reflections, following the formula, you'll multiply 1 billion by 50 million and then divide by 20 quadrillion. The results of this calculation will give us 2.5. That means that every day you'll be earning a reflection of $2.50. If you convert that to SafeMoon based on the rates, that would give us roughly 1.3 million SafeMoon tokens. Doing the math, if you make 1.3 million SafeMoon tokens in reflections every day without doing anything else to your holding, without purchasing any additional tokens, you can double your holding in a little over 24 months. It might seem unimpressive, but remember that these are conservative guesstimates. Remember that we are assuming that SafeMoon's price remains the same all through, which is highly unlikely. We are also assuming a daily trade volume of 50 million when SafeMoon can easily do 1 billion in the future, especially with the products on the lineup for release. Now, let's imagine we do a volume of 1 billion with a holding of 1 billion SafeMoon. That would bring us to $500 per day. That will bring us to about 260 million SafeMoon every day. In this case, doubling our holding would take roughly 5 days tops. Therefore, it comes back to volume and how much SafeMoon you're holding. The devs team is doing their part by creating products and negotiating partnerships that ensure that we get the exposure and investments we need. On our part, we need to increase our holding because in the end, it's those who hold the most amount of SafeMoon tokens that earn the most in reflections. In essence, the more SafeMoon you have, the shorter time it takes to double your holding. How to buy SafeMoon? The main method to buy SafeMoon is through PancakeSwap. PancakeSwap was launched last fall and serves as a robotized market maker. It's a decentralized finance application that allows a wide assortment of trading, liquidity providing, and yield farming operations. SafeMoon's true Twitter account posted a video instructional tutorial on the most proficient method to buy SafeMoon using PancakeSwap. Users first need to buy Binance tokens. These should be placed on a wallet that supports the innovation. SafeMoon's backers suggest that MetaMask and Trust are two acceptable options. From that point, traders can exchange the Binance tokens for SafeMoon over the BSC network. The Bitmart exchange is another acceptable choice. It listed SafeMoon back on April 5th, preceding it truly took off and thus has established respectable liquidity for the token as well. Do like this video. Also, subscribe and share to our crypto channel. Do let us know your thoughts about SafeMoon in the comment section down below.